corporate investors are playing a significant role in the AI startup ecosystem. They are funding AI startups more frequently and generously than other sectors, and they have various reasons for doing so. In this section, we will explore some of the main motivations that drive corporate investors to back AI startups. One reason is to access cutting-edge technology. AI is a rapidly evolving field that requires constant innovation and experimentation. By investing in AI startups, corporate investors can gain access to the latest research and development, as well as the talent and expertise of the founders and engineers. This can help them improve their own products and services, or create new ones that leverage AI capabilities. Another reason is to gain competitive advantage. AI is transforming many industries and creating new opportunities and challenges. By investing in AI startups, corporate investors can stay ahead of the curve and gain insights into emerging trends and markets. They can also benefit from the network effects and synergies that arise from collaborating with other investors and startups in the AI space. A third reason is to acquire potential targets. AI startups often have high growth potential and attractive valuations. By investing in them early, corporate investors can establish a relationship and a stake in their future success. This can give them an edge over other acquirers when it comes to negotiating a deal or integrating the startup into their own organization. These are some of the reasons why corporate investors are interested in AI startups. As AI becomes more pervasive and impactful, we can expect to see more corporate involvement and investment in this sector. Artificial intelligence, AI, is no longer a piece of fiction, but rather a reality that is transforming various industries and sectors. One of the indicators of this transformation is the increasing amount of corporate investment in AI startups, which reflects the growing interest and demand for AI solutions and innovations. In this section, we will look at some of the trends and statistics of corporate investment in AI startups, such as the amount, frequency, and sectors of funding. According to Statista, the global AI market size was estimated at $327.5 billion in 2021 and is expected to grow to over $2.2 trillion by 2030. This shows the huge potential and opportunity for AI startups to create value and impact across various domains and applications. However, developing and scaling AI solutions requires significant resources and expertise, which is why many AI startups rely on external funding from investors, especially corporate investors. Corporate investors are entities that invest in startups as part of their strategic objectives, such as acquiring new technologies, accessing new markets, or enhancing their competitive advantage. According to a report by the Center for Security and Emerging Technology, CCT, out of 1,191 total investors in TopU AI startups, 196 are corporate, or 16%. In addition, 71% of TopU AI startups have one or more corporate investors. This shows that corporate investors play a significant role in supporting and shaping the AI startup ecosystem in the EU. The level of investment in AI startups has also increased over time. According to McKinsey, 5 years ago, 40% of respondents at organizations using AI reported more than 5% of their digital budgets went to AI, whereas now more than half of respondents report that level of investment. Moreover, according to VentureBeat, the global annual value of venture capital, VC, investments in AI startups grew from $3 billion in 2012 to nearly $75 billion in 2020. Funding increased 20% last year alone, with startups based in the EU and China nabbing over 80% of all investments in 2020. The sectors and domains that receive the most corporate investment in AI startups vary depending on the source and methodology of analysis. However, some of the common themes and categories include healthcare, fintech, e-commerce, autonomous vehicles, cybersecurity, and natural language processing. These sectors reflect some of the most pressing challenges and opportunities that AI can address and enhance. In summary, corporate investment in AI startups is a key indicator of the growing importance and impact of AI across various industries and sectors. The trends and statistics show that corporate investors are actively seeking and supporting AI innovations and solutions that can create value and competitive advantage for their businesses and customers. In this section, we will look at some examples and stories of successful AI startups that have raised funding from corporate investors. These startups are using AI to solve various problems and create value for their customers and partners. One of the startups is Acera, which develops an AI-powered service experience platform for automated employee and customer support. Acera has raised $164.5 million in 4 funding rounds, with the latest one being a $90 million Series D round led by Goldman Sachs and Thoma Bravo. Acera's investors also include Menlo Ventures, Norwest Venture Partners, Icon Ventures, and Silicon Valley Bank. Acera claims to have achieved over 300% year-over-year growth and expanded its customer base to more than 75 million users. Another startup is Protex AI, which uses computer vision and AI to prevent workplace injuries and improve safety compliance. Protex AI has raised $18.1 million in 2 funding rounds, with the most recent one being a €18.1 million Series A round led by Notion Capital. Protex AI's other investors include Playfair Capital, Elkstone Capital Partners, FlexSport, First Minute Capital, Y Combinator, Score Ventures, and Circle Rock Capital. Protex AI says its technology can reduce workplace accidents by up to 80% and save millions of dollars in insurance claims. A third startup is Neurons, which provides neuroscience tools and insights to help businesses understand and improve the consumer experience. Neurons has raised $8.4 million in 2 funding rounds, with the latest one being a €6 million seed round with participation from Fairpoint Capital, Vakstfonden, and Finance Zealand. Neurons has also acquired 2 other startups, Visualize and LockEye, to expand its product portfolio and customer reach. Neurons works with clients such as Lego, IKEA, Coca-Cola, Google, and Netflix to optimize their marketing, branding, and product design strategies. These are just some of the examples of how AI startups are attracting more funding from corporate investors who see the potential of AI to transform various industries and domains. By leveraging AI technologies such as natural language processing, computer vision, machine learning, and neuroscience, these startups are creating innovative solutions that deliver value to their customers and partners.